Welcome to the Deep Dive, your shortcut to being well informed. If you're navigating the real estate scene in London, Ontario right now, maybe thinking about buying that first place or selling or even looking at investment properties, well, you know how vital it is to get clear, reliable information. Today, we're doing a deep dive into the London market using insights straight from the experts at Forest Hill Real Estate Distinction Branch right here in London. They're a fantastic resource. You can check them out at www.foresthilldistinction.com. So, our mission today to really unpack the key data from the June housing market. We're focusing on, the signs of stability and the positive trends for buyers, sellers, and investors like you. We want to give you the important stuff, the nuggets of knowledge without overwhelming you. And just to keep things clear, we'll be rounding all the big numbers to the nearest thousand. Okay, so let's unpack this. Despite, all the headlines about the global economy maybe causing some jitters, the London and St. Thomas housing market actually showed a, remarkably steady streak in June. When we say steady streak, what does that actually mean for someone looking to make a move? Does it mean things are calming down a bit?
It really does, yeah. What's quite interesting here is how the local market just kept showing these strong signs of stability. So in June, we saw 745 homes change hands through the MLS system.
Okay, 745. And the MLS, that's the main system agents use, right?
Exactly, the multiple listing service. And that level of activity, 745 sales, it speaks to a pretty consistent flow. It's not like some markets where you see these huge swings, big surges, or sudden drops. London had this steady rhythm. And for you listening, that predictability often means, well, less pressure. You might have a bit more time to think, do your homework, make a considered choice instead of feeling, rushed into something.
That definitely sounds like a positive, especially compared to some of the volatility we've seen elsewhere. So building on that stability, steady sales are one thing, but what about the actual supply of homes? Was there enough to choose from?
That's a really critical question. It gets to the heart of market balance. And actually, we saw housing supply stabilizing last month, too. We ended June with almost 4.5 months of inventory.
4.5 months.
Yeah. And importantly, that was unchanged from May.
Okay, so what does months of inventory tell us exactly?
Right. So think of it like this. If no new homes came on the market, it would take about 4.5 months to sell everything currently listed. Generally, somewhere between 4 and 6 months is considered a balanced market. So London holding steady there suggests that new listings are keeping pace with demand reasonably well. You're not seeing a major shortage or a huge glut.
Finding that sweet spot then.
Pretty much, yeah.
Yeah.
It helps create that feeling of balance for everyone.
Okay, that makes sense. And I heard, this is where it gets quite interesting, that there was a positive trend with new listings specifically. More choice coming online.
Absolutely. And this is really encouraging. We're continuing to see a strong trend of more new listings hitting the market. In June alone, there were 1,814 new listings.
Wow, 5,814. How does that compare?
Well, it's up significantly, a full 10.5% compared to June of last year.
Okay, that's a pretty healthy jump.
It is. And this constant flow of new properties is great for buyers, obviously.
Yeah.
Gives you more choice, helps ease some of the competition.
Yeah.
You're not just seeing one or two potential places and feeling you have to bid high. You can look for something that really fits.
Right. So more listings, steady sales.
Yeah.
How does this all fit together in terms of market conditions? Is it balanced, like you said?
Yeah, let's connect those dots. If you look at the sales to new listings ratio for June, it was 41.1%.
41.1%. And why is that number important?
Because it's a key indicator of market balance. The Canadian Real Estate Association, CREA, they generally consider a ratio between 40 and 60% to be consistent with a balanced market.
And we're at 41.1.
Exactly, right in that healthy zone. It strongly confirms we're not in a heavy buyer's market or a heavy seller's market. There's enough stock for buyers, but not so much that sellers are overwhelmed. It explains the stability we're seeing.
Okay, so that does sound like genuinely good news for both sides. Less frantic for buyers, maybe less waiting for sellers.
Precisely. It allows for more thoughtful decisions, less stress overall, which is healthier for everyone involved.
Let's talk prices then. Always top of mind, right?
Always.
We hear about the average sales price, and then there's this thing called the HPI benchmark price. What's the difference, and what did they tell us in June?
It's really important to understand both, actually, because they paint slightly different pictures. So the average sales price for June was around $651,000.
$651,000. Okay.
Now, that was down just a little from May's average of $656,000, and it was down 4.2% compared to June last year.
A slight dip then.
Yes, but it's crucial to remember what the average price represents. It can be influenced by the mix of homes sold in a particular month. Like if a few very expensive homes sell, it can pull the average up, even if the value of a typical home hasn't changed much. It's just a snapshot of what's sold.
Got it. So the average can be skewed a bit. And that's where the HPI benchmark comes in, to give a more stable view.
Exactly right. The HPI, that's the Composite MLS Home Price Index. The benchmark price for June was around $581,000.
581,000, so lower than the average.
Yes, and this was down 2.2% from the previous month. The HPI is really useful for tracking trends over time because it reflects the value of a typical home in the area. It tries to model a standard home, same features, age, etc., and track its value change. So it filters out that noise from the mix of sales.
Ah, okay. So it's tracking the value of a consistent type of home.
That's the idea. It gives you a clearer sense of underlying value trends, whether appreciation or depreciation.
So even with those slight price adjustments month over month, the main story is still that stability we talked about, supported by the strong listings and the balanced market ratio.
That sums it up perfectly. The stability is really the key theme. Minor price movements in a balanced market are often just adjustments, not signs of some big swing.
Okay, so pulling it all together, what's the final takeaway for someone thinking about London, Ontario for real estate right now? Buying, selling, investing. What makes it stand out?
Well, what's really compelling, and this isn't new for London, is that when you compare it to other major centers, provincially or nationally, homes here just appear highly competitive for buyers. You get a lot of value.
More bang for your buck, essentially.
Definitely. That's been a hallmark of the London market for years. It's what makes it so attractive. What might get you a small condo in a larger city could potentially get you a detached home here. That impacts quality of life, long-term investment.
Makes sense.
But while the overall data shows this stable picture, it's so important to remember every single transaction is unique. Your own situation, the specific type of house, the neighborhood.
Yeah.
It all matters. And that's really where local real estate professionals shine. They have that on-the-ground knowledge to navigate these specific conditions.
Absolutely critical. So what does this all mean for you listening? Well, we've seen the London market in June showed clear signs of stability. There is a healthy supply of new homes coming up, giving buyers options. And it's a balanced market, which is generally good for both buyers and sellers. It's competitive, yes, but also attractive, offering real value compared to many other places.
Right. And understanding these broader market conditions, that's your essential first step. It helps you make sense of it all. But for that personalized advice, tailored specifically to you, whether you're buying, selling, or investing, local experts are just invaluable. They translate the big picture into what it means for your move.
Well said. And for more of that in-depth expert information relevant to your goals here in London, Ontario, definitely visit www.forsthilldistinction.com. They're a really great resource.